Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for gold. So gold versus the price of the US dollar. The date is Sunday, August 9th, 2020. It's 5:20 p.m. Eastern Standard Time here in the States. If you want to stay up to date with all of our videos, make sure you click that red subscribe button on the bottom right-hand corner of your screen. This is the daily chart for gold. As you can see, my sentiment's mixed. Do I believe it's going to keep going up? Yeah, sure, but eventually it's going to have to cool off and retrace. So watch for the retrace or look for the retrace to 1925. So let's talk about why I say that. So if we look back in the big weekly perspective, right? So we're at new highs. We're way up here, and we're way ahead of the fast-moving average. So all the way down here, this is the 20-day fast-moving average. It's about 1778, but price is about 2034. So anytime, if you go back any chart, this works in any chart, you can see that eventually once price moves too far ahead of the fast moving average, it has to catch up before it can go any further. And the same thing, if it falls too far below, it has to kind of coil back and retrace. So here, for example, we see, if we go back to 2011, we see a big bull run, and we see right around here, before price snaps back, fast moving average is at 1602 and price is about 1900, and then we see the snap back before price goes up. So I'm getting concerned that that's going to happen again here soon. Might not be this week, but as you can see, this is a very perilous uptrend. You really want your trends to be more, the angle to be less dramatic, if you will. So I think we're going to see is a cool off. But what does that mean? Where will it cool off? And all that means is, doesn't mean price is going down as far as like the trend's going down. It just means you might be able to get a better buy. So I've drawn on this trend channel here, and as you can see, right in the middle of the channel, price, right, kind of wandered below and moved above. So if I were to take this channel, this parallel channel, and clone it and make another one, now if I was to drag that up here, you can see, interesting, look at how perfect that worked. There was a couple days ago, there was a sell-off. Price came down, touched the top of this trend. So I think what we're going to do is this price and this line are going to catch up, and it should be this week. So we saw this happen in the euro on Friday, a couple other currencies where price will probably, maybe not even go to 1925. It might dip to about 1950, and that's your next big buy. So as always, remember, buy the dip. Meaning you don't want to buy when price is too far ahead of the fast-moving average or the trend, because then it's going to come back down before moving, so then you're going to be sitting waiting for your position to go profitable. It's much better to buy the dips. So just every time you turn on your charts, look for uptrends where the price is kind of coiled over. See back here, back in June, that was a great buy at 1675, right? It looked like it was about to go down, but in fact, that low was no lower than these other ones, making it a great buy. So now we've just seen new highs, new highs, new highs. Eventually, it's going to cool off. I'm thinking it's going to start happening this week. Price is going to cool off, coil over here to like the 1950, and make for good buying the next couple of months possibly before we see our next takeoff. It just has to happen. What goes up must come down. Does not mean the trend's turning around. Just means you have a chance to buy at a better price. So listen, if we were to outline this with these reds, see this red trend line, that's where I'm highlighting the very bottom one, the very core trend line. Oops. So let's go ahead and get rid of these parallel channels. And I can just go ahead and mark it out with these red ones. So I'm going to take this bottom trend line, and the reason I'm picking this is because, look, over time, price has stayed either on top of it or below it, right? And so now we're moving way above. So if we're this far ahead of the trend, we want to find where price is going to touch. All we do is clone this, all right? So we take this, we clone it, and then we drag it up. So here we can see the top of this trend pinged off of this, right? Then we do another clone. Now, I honestly, the more that charts fill out, right, color it in, the more support. There's a lot of support that got built into this 1820 price point. Now we're kind of flying high, but we need to build some more support, and it would be a perfect time for price going over here. And as you can see from these parallel trend channels, as long as price hangs out here, the uptrend is on, and our positions are safe, right? We don't have to worry about our stop losses. We can tuck our stop losses way back here under 1820 and feel pretty good that the value per ounce is not going to go below 1825 anytime soon. Because in order to do that, it would need to crash through this support, this parallel trend line, the fast moving average, this parallel trend line, and come down. It would still have a massive amount of support lines established way back in 2011. So in trading, nothing's a sure thing, but this is pretty close. All right, everyone, I hope you have a great week trading. I hope you make lots of profit, and we'll talk soon.